For years now, Tether's USDT has been the default crypto dollar. If you've traded crypto on an exchange or moved money across borders at light speed, then you've probably used it. But there's always been one uncomfortable aspect to USDT: compliance, especially in the biggest arena of all, the United States. So now Tether has made a bold move. It's launched a separate US-focused stablecoin, USAT, built for America's new stablecoin rulebook. That's a shot fired in the stablecoin wars. Tether doesn't just want to dominate offshore, it also wants a legit onshore product too, right where Circle and USDC have been strongest. And at the same time, Tether is sending a totally different message to the market with gold. Not just their tokenized gold, but a real hoard of precious metal on such a scale that Tether is now being treated as a serious player in the $34 trillion gold market. So, what is USAT? Why build it alongside USDT? What's the endgame with all that gold? And how does Tether plan to remain the king of stablecoins? We dive into all of that and more in today's video. My name is Guy, and you're watching The Coin Bureau. First up though, I must make one thing clear. I'm not a financial advisor and nothing in this video should be considered financial advice. This is just our take on the big moves Tether is making to retain its crown. And if you like content like this, then show us by hitting that like button, and let's get started. All right. Let's begin with Tether's new stablecoin, USAT. The main difference from Tether's USDT is pretty straightforward. USAT isn't just USDT branded for the American market. It's a separate stablecoin with a US native setup, created because the US has established a federal rulebook for stablecoins, and that rulebook must be complied with. Tether's CEO, Paolo Ardoino, announced the launch of USAT just a couple of weeks ago. Former White House official Bo Hines leads the project as CEO of Tether USAT, while Anchorage Digital Bank will operate as the issuer. Notably, Tether has said that USDT will keep operating as a foreign stablecoin, while the new US product is built to meet regulations laid out in the Genius Act. In Tether's official communications regarding USAT, it outlines all the disclaimers US regulators want to hear. USAT is not legal tender, it's not issued or guaranteed by the US government, and it's not protected by FDIC or SIPC insurance. That might sound like straightforward legal stuff, but it isn't. It's the whole strategy. That's because the Genius Act sets a baseline for what a legal stablecoin means in the US. The law states that stablecoins must be backed one-to-one with liquid assets like US dollars or short-term treasuries. Also, issuers have to publish monthly public disclosures about reserve composition. It also highlights strict marketing rules, no implying you're government-backed, insured, or legal tender. And that's why the issuer of the stablecoin is an important factor. When a stablecoin is issued through a federally supervised bank, such as Anchorage, it changes everything. The focus is no longer on whether the peg holds, because there's a strict set of examinations, oversight, and operating standards inside a system built to punish financial funny business. Anchorage issues USAT directly from its federally regulated bank, under the oversight of the Office of the Comptroller of the Currency. It's essentially Anchorage broadcasting that USAT is being produced inside the American banking perimeter, with bank-grade compliance, risk management, and reserve transparency presented as core features. So, where does that leave USDT? Well, USDT remains the global heavyweight. It's the token that is already everywhere in crypto, used by traders, exchanges, and people who just want digital dollars that move fast and freely. But Tether knows the US is changing the rules of engagement, and the US is, of course, a major market for crypto. So instead of trying to force USDT to operate in some kind of grey area, Tether is creating a dedicated US product that starts with compliance and works backwards. That's the realization that Tether appears to have had. So USAT is Tether acknowledging that being the biggest isn't the same as being welcome in the biggest market. And with that, you can see what Tether is really trying to do. Keep USDT dominant globally while making sure it can't be boxed out of US institutional demand as stablecoins get pulled deeper into regulated finance. So, USAT is an effort from Tether to not only retain its title as the leading stablecoin issuer, but also go after more market share. But how firm is Tether's lead? Is it now set to eat its competitors? Well, according to CoinGecko data, USDT sits at a $185 billion market cap, while the newly minted USAT has a market cap of $20 million. Granted, it's in its infancy. In any case, Tether dominates the stablecoin market with about 60% market share, while Circle's USDC, the next largest competitor, sits at only 23%. But if you want to understand the stablecoin war, it makes more sense to see what the trajectory has been like recently. Why? Well, because crypto has been trending down for months, and now even the total stablecoin market cap is falling. When times are tough and BTC is dragging all manner of market metrics down with it, you get insight into which crypto assets have more resilience. Since mid-January 2026, the overall stablecoin market cap began to decline from its peak of $311 billion, and who was leading the way? Circle's USDC. But let's put numbers on this to better illustrate the point. At the time of making this video, in the early days of February 2026, USDT sits at a market cap of about $185 billion. Since mid-January, when the total stablecoin market cap began falling, that's only down around 0.9% from its all-time high. Meanwhile, USDC now sits at just under $71 billion. Since mid-January, that's down about 6.5%. So both are feeling the pressure as crypto goes further risk-off. But USDC has been shrinking a lot faster. And that gap is where the real fight is happening, because USDC and USDT have always had different selling points. Circle's main selling point has been compliance, a stablecoin that always plays by the rules and is built for the regulated world. And that's important for people or entities moving size like banks, payments giants, and other institutions with strict compliance. Case in point, in December last year, Visa announced it was expanding stablecoin settlement for US banks using USDC. And that form of integration is precisely where Circle plans to thrive. It may not be the most exciting headline for crypto natives, but it's the sort of thing that creates an avenue for major stablecoin adoption. Tether's main edge, on the other hand, has historically been distribution. USDT started the stablecoin model we know today. It's the first stablecoin most people in crypto started their journey with, and it's widely used across all manner of exchanges and even across borders. Tether's brand is the default for many crypto natives, and the firm has only built on that reputation over the years. Now, the problem for Circle is that compliance has been a moat mainly because Tether didn't have a US product that could credibly play that game. But that's what changed at the end of January when Tether and Anchorage Digital announced the US-focused USAT. USAT is the first credible domestic competitor for institutional dollars that could genuinely threaten Circle's positioning around USDC. So, shots very much fired. Because if Tether can keep its global dominance with USDT and also offer a US-friendly option with USAT, then Circle's main differentiator begins to look less exclusive. But having said that, Circle still excels in a metric that's hard to ignore: user activity. According to data from Artemis Analytics, stablecoin transactions hit $33 trillion in 2025, and USDC accounted for $18.3 trillion of that, versus $13.3 trillion for USDT. So, even while USDT is much larger by supply, USDC has been doing more movement. That tells you the crucial difference. Supply dominance and usage dominance aren't the same thing. Tether's brand can be the default digital dollar people hold and quote against, while USDC can be the one that's used disproportionately in settlement and high-frequency on-chain activity. In a downturn, both can shrink, but they shrink for different reasons and to different degrees. And by the way, if you want to stay informed on the battle between Tether and Circle as it rages on, then you should sign up for the weekly Coin Bureau newsletter. It's absolutely free, and you can sign up using the link in the description. And while you're at it, why not check out the exclusive deals we've secured for viewers of this channel? These include huge sign-up bonuses and trading fee discounts on crypto's leading exchanges, great deals on hardware wallets, and much more. All that is accessible via this QR code right here, so take a look. Now, Tether's strategic stablecoin moves are one thing, but if we want to know what Tether thinks the future looks like, we need to look beyond the stablecoins themselves and look closer at Tether's reserves. What sticks out? Gold, and lots of it. In the latest assurance report covering the end of 2025, Tether's issuer entity says it had $192 billion in reserves backing its fiat-pegged tokens, with assets exceeding liabilities by about $6.3 billion. In the breakup of what's backing USDT, precious metals comes in at $17.45 billion. And what's that referring to exactly? Physical gold bars owned by Tether International. Now, that whopping hoard of gold is changing the optics around Tether the organization. Sure, the majority is still classic stablecoin stuff like short-dated treasury bills and reverse repo. But once you're holding gold in the tens of billions, you're carving out a prominent place for yourself in the $34 trillion gold market. And that's exactly how Tether wants to be seen. Mainstream media has been reporting that Tether has become a serious presence in the gold market. Based on that latest attestation, Bloomberg estimated Tether had a pile of around 140 tons stored in Switzerland. That's big enough such that it's described as the largest known stash of bullion outside of banks and nation-states. Tether CEO Paolo Arduino offered some comment to Reuters that aligns with that estimate. He told reporters that Tether already had about 130 metric tons of physical gold, and that they're buying roughly 2 tons a week. Arduino said the firm wants gold to represent something like 10 to 15% of the firm's investment portfolio over time. So, just what the heck is Tether up to here? Well, for one, the gold can be viewed as a macro hedge. Gold's been on a tear, even considering the recent sell-off, and if you're throwing off huge profits from rate-driven income, converting some of that into a hard asset could make sense. But the deeper play is reputational. Tether is trying to graduate from a crypto issuer that prints USDT to a collateral manager that can run reserves across industries and across cycles. There's also the pure business side of things with Tether's tokenized gold. Now, to be clear, the gold backing Tether's tokenized gold token XAUT is separate from the gold on Tether's balance sheet regarding USDT. But anyway, the tokenized gold market sits at over $6 billion, growing 4x since the end of 2024. Tether wants to dominate that market as it does US dollar stablecoins. But this is where the gold story stops being universally flattering. Because backing tokenized gold with actual gold is straightforward, but Tether using gold as partial backing for USDT is another thing entirely, and it's drawing some scrutiny from the market. In November, S&P Global downgraded its stability assessment of USDT to 5, the lowest score on its scale. They cited Tether's increased exposure to higher risk assets like BTC and gold, alongside secured loans, corporate bonds, and what S&P called persistent gaps in disclosure around custodians and counterparties. Now, as anyone who's studied the 2008 global financial crisis can tell you, ratings agencies don't always get it right, far from it. Nevertheless, S&P Global's perception of Tether still captures the institutional mindset. Stablecoins are supposed to be boring. The more complicated the backing gets, the more you're asking the market to trust your judgment under pressure. In that context, Tether's issuance of a US-compliant USAT is no surprise. It's a clear move to capture more institutional demand for stablecoins. But in any case, Tether reportedly finds itself holding 140 plus tons of gold, and that will play a key role in the company's future plans. But what do those plans actually look like? What is Tether's strategy going forward? Well, for starters, with that 140 tons of gold, Tether isn't just collecting shiny rocks. It's starting to treat bullion like a business. In late 2025, Tether planned a dramatic expansion in lending to commodities traders after extending roughly $1.5 billion worth of credit. That's notable because commodity trading is basically built on credit and collateral. If you have a monster balance sheet and a growing pile of precious metals, you can do more than just sit there hoping the price goes up. Tether plans to keep pushing profits into gold while also starting to compete with banks in trading the metal, recruiting 2 senior gold traders from HSBC late last year. That's a pretty clear signal. They're not only thinking about reserves, they're thinking about market making and inventory. Tether has also held talks to invest across the gold supply chain, from mining and refining to royalty businesses, while also expanding into commodity trade finance. But let's bring things back to stablecoins, because the gold strategy, as big as it is, sits inside something bigger. Tether's whole game is distribution, jurisdictional positioning, and partnerships, with a side order of diversification. In January 2025, Tether relocated to El Salvador after securing a digital asset service provider license there, and Paulo Arduino said it would be the company's first physical headquarters. That choice is about anchoring the company in a place that welcomes it, while the rest of the world's jurisdictions finalize exactly how hard they want to squeeze stablecoins. USAT has been a clear play with that in mind. The US has largely formalized its view on stablecoins, and it's a key market for obvious reasons. And Tether needs to win in that region because in other regions, the squeeze has been real. In Europe, MiCA regulations have pushed exchanges into cutting off stablecoins they can't comfortably support. Binance has delisted non-compliant stablecoins for EEA users, including USDT. And Asia isn't exactly anything goes either. Hong Kong's regulator has been moving slowly, but expects to issue its first batch of stablecoin issuer licenses in March 2026, and only a very small number at first. Japan, meanwhile, already directs issuance through regulated financial institutions, while Korea is still building a one stablecoin framework designed to keep issuers under strict oversight. But beyond stablecoins and gold, Tether is actually diversifying further. It's among a long list of firms investing in Bitcoin mining operations powered by renewables. The company has also put money into things as far apart as a $775 million stake in video platform Rumble, and is in talks about a potential €1 billion investment into German robotics firm Neura. So, Tether is complementing its massive moves in stablecoins and gold with a whole slew of other major ventures. When a stablecoin issuer is trading gold, financing commodities, buying energy, and building a huge investment portfolio, Well, the label of crypto company begins to sound a little wide of the mark. And given how broad Tether's activities have become, it's increasingly difficult to pin down what kind of company it really is. And that sets up one of the main criticisms that's emerged amid its latest push with USAT. Can one brand credibly sell two completely different versions of digital dollars without the trust issues bleeding across, all while it becomes a gold behemoth and a venture firm? USAT changes Tether's business, both explicitly and implicitly. Tether isn't just promising that everything is fine anymore. It's explicitly stepping closer to the world of institutional due diligence and disclosure expectations that don't really care about crypto's old norms. However, now that we have a US-friendly Tether stablecoin, the brand is implicitly admitting the other product, USDT, isn't built for the same standards. Now, some users won't care. They just want a stable token that's widely accepted. But others might wonder, if Tether can do a regulated product for the US, why should markets tolerate opacity and reserve complexity in the offshore giant? And from that perspective, Tether's hoard of gold adds more complexity to this identity problem. Tether ended 2025 with gold holdings above $17 billion, alongside net profits topping $10 billion. That's clearly a company that wants to be seen as a serious collateral manager, not just a token issuer. But in that, they're also handing critics a clear target. Stablecoin backing is supposed to be boring and liquid, especially under stress. And as we just saw with the 30th of January metals wipeout, any gold backing of USDT becomes more questionable. Gold dropped over 20% across just 3 days, and that's not to mention the moves BTC is capable of, considering it's another alternative asset backing USDT. So, can Tether pull off being the best of both worlds without tripping over itself? Well, quite possibly, if USAT stays truly ring-fenced and institutions treat it like a separate product with separate rules. But if the market views Tether as one unified reputation, then things could get messy. A controversy around USDT could contaminate USAT by association. And the scrutiny that comes with USAT could raise uncomfortable questions that USDT has historically been able to sidestep. But for now, Tether is king, and there's no sign of anyone else taking that crown anytime soon. Well, that's our outlook on Tether and its major moves in stablecoins and beyond. But what do you think? Is Tether destined to remain king, or is it trying to do too much too fast? Let us know your thoughts down in the comments. And if you want to find out why stablecoins are at the center of crypto regulation controversy, you can watch our video on that right over here. That's all from me for today, though. As always, thank you for watching, and I'll see you in the next one. This is Guy, signing off.